Okay. Good afternoon, good evening, everyone, and welcome to today's showcase event. My name is Liu Fuji from Fracton Venture, and I'll be your host for this session. Thank you so much for joining us. We are really excited to have participants from both Japan and overseas today. This event is to highlight DeFi innovation powered by JPYC and to showcase the amazing projects supported through the Fracton Ventures incubation program. So over the next hour, you will hear from several promising projects building on top of JPYC, and we hope this gives you a glimpse into the expanding possibilities of Japan's crypto ecosystem. And then before we begin, just a quick note, this event is for informational purpose only and does not constitute any investment or financial advice. Okay, thanks for your understanding. Now to start things off, we'd like to share a few words from our team at Fracton Ventures. First, please welcome Yudai Suzuki for opening up remark.
Sure. Yeah, thank you again. Thank you for coming to this tonight JPYC DeFi showcase. I'm co-founder of Fracton Ventures. I'm Yudai Suzuki. I have been working at Fracton Ventures since 2021. So I just wanted to explain about what is a Fracton and why we are doing something this tonight a presentation or showcase or normally we are hosting demo day or in each of the similar incubation program. So Fracton Ventures is a Ethereum incubator. Now we are calling Ethereum incubator. We have started a Web3 crypto incubator in 2021. It was a beginning point. Since then, we started to focusing on how we can deeply support for early stage founders, early stage developers, especially crypto is completely technology oriented ecosystem. So also we are very careful about how we can collaborate, how we can support as these type of founders. And since 2021, we have been providing over 4 cohorts already, and now we are providing cohort 5 right now. And also we already already graduated over our 45 protocol founder in the past. And also why we are focusing on is that recently we are focusing on mostly spending our time for Ethereum ecosystem. So why Ethereum? So why Fracton contribute for Ethereum? So our Fracton we have a heart for long-term ecosystem development and supporting for Ethereum ecosystem. The reason is that at the first, our Ethereum is a completely decentralized network, and there's no downtime in 10 years. Or this year is an anniversary year of 10 years since started Ethereum network as a blockchain. So before starting to Ethereum, there's only one blockchain completely of decentralized level, as over than Ethereum. We know the name of the ecosystem. It's a Bitcoin. So Ethereum is have a long-term history to the actual decentralized network in the ecosystem, and also we are believing how next generation people should contribute and the more expansion of Ethereum ecosystem. Right now, there's lots of stable coin. One of the main topic of this tonight showcase has already deployed on top of Ethereum L1, L2s. And also we could see lots of other additional types of RWA stuff, and also the more unique stuff DeFi opportunities token staking or yield farming or any other synthetic asset class on this, or we could see normally. So we are believing Ethereum's future, and also we are as a Fracton we'd like to become Ethereum corporation. So we are believing Ethereum's decentralization, permissionless, and future ecosystem development, and it will be increase more and more, and Ethereum can use for public goods or ecosystem as well. So this point is very great focusing point. That's the reason we are contributing in Ethereum. I will pass to next incubation explaining about it will be presented by Kazuya, who is a lead of Fracton incubation.
Yeah. GM everyone, I'm Kazuya, incubation lead at Fracton Ventures. So thank you so much for joining us today. So I would like to share about Fracton incubation program. So far we have completed 4 incubation programs, and we have supported more than 40 teams from Japan and around the world. And these teams are building in many different areas like DeFi, infrastructure, social, entertainment, and public goods. If you look at the chart on this slide, so you can see how diverse they are. And in Japan, we have many strong entertainment and culture project, but we also keep focusing on DeFi, decentralized finance. At Fracton Ventures, we don't run away from DeFi. We continue to support DeFi protocol and DeFi founder that are building new ideas and improving decentralized finance. And each team is different. So we always try to give the right kind of support, like product feedback, community growth, and GTM support, or connections with investor and partners. Many of our alumni are now growing fast in the global DeFi ecosystem. They are building tools and protocols that follows Ethereum spirit of decentralized and openness. We believe that helping both the DeFi builders and culture creators, we can make Japan stronger in the global crypto Web3 space. And today, we are really happy to introduce some of our incubated teams to everyone. Thank you so much. And over to Ryu-san.
Okay, thank you, Yuda and Kazuya, for the great introduction. Now we'll welcome our keynote speaker from JPYC, who will share their insights on how stablecoin can unlock innovation in the DeFi ecosystem, both in Japan and globally. So please join me in welcoming our keynote speaker from JPYC.
Yeah, thank you very much. I'll share my deck. Okay, can you see my pitch deck? Okay.
Yes.
Well, thank you very much. First, thank you very much for Fracton Ventures for this great opportunity. It's my first pitch in English since since we JPYC issued Japanese yen stablecoin since October 27th. So it's a very good opportunity, both JPYC and you all. So our mission is breaking through social dilemma. JPYC is building a foundation for innovation through blockchain and stable coins. We are the Web3 startup financial institutions issues Japanese yen denominated stablecoin named JPYC. We founded since 2019. One of our investors is Tarko, USDC's issuer. After 4 years of pursuing financial innovation as a startup, we applied for registration. And we've got the first Japanese yen stablecoin issuer license, and we start issuing JPYC, new JPYC, since October 27th. Thank you very much. So we have 6 board members. All of us have great experience about blockchain industries. I am a serial entrepreneur. It's my 3rd startup. Before I found JPYC, I was co-founder and CTO, CFO of blockchain gaming company, but it was too fast. And following Japan's first registration of a yen-denominated stablecoin issuer, major media outlets, including Nikkei and NHK, provided expensive coverage. JPYC has emerged as a leading player in Japan's stablecoin market. So we have 5 years experience to issuing Japanese yen stablecoin. At first, we issue prepaid type of stablecoin, and Japanese government make new stablecoin specified regulation, and we became the first JPY denominated stablecoin issuer right now. With over about 5 years of proven experience, we are engaged in the stablecoin business. There are 2 major news about stablecoin in this year. Of course, one is the one news is Genius Act, and the stablecoin market capitalization exceed 300 billion right now, and active wallet addresses per month become 55 million. Stablecoin trading outpaces Visa, and about 50 different stablecoins to be appear by the end of the year, but only 2 or 3 stablecoin is major right now. And stablecoin issuers become huge holders of U.S. treasuries. Of course, Japanese yen stablecoin issuer will become huge holders of Japanese government bond. Global market of stablecoin is quite huge. For example, stablecoin market to grow to 3.7 trillion by 2030. And the second big news about this industry is Circle's IPO. Circle's invested in JPYC in 2021. We are the first startup that Circle invested in the world. For Japanese government, stablecoin is one of the national strategy. For example, in G7 Hiroshima Summit results, we announced Japanese government announced that kind of announcement, and LDP Web3 proposal 2025, and in Data Nippon 2025, stablecoin becomes a national strategy, and especially Japanese yen stablecoin is very important for our government. So Japanese stablecoin regulation is quite concrete, very okay. So stablecoin is electronic payment instrument, and it's very similar to cash and bank deposit. And in cash flow statement, EPI, electronic payment instrument like JPYC, is become one of cash. So fiat-backed stablecoin like JPYC is not crypto asset in Japanese regulation. So cryptocurrency value is not pegged to fiat currency, and sometimes it's pegged. But stablecoin backed by 100% fiat or government bond, it's very stable. So it's quite different. And we need to explain about the relationship between stablecoin and existing digital money. So digital money, insurance, redemption, transfer, customer interface is provided by issuer. But as EPI, we are only issuer. Everyone becomes blockchain node administrator, and third-party services is available. For example, everyone can make their own wallet or exchange with license. So more than 2 years of continuous efforts from legal amendment to application, we finally got the license to issue Japanese yen stablecoin. We establishing AML CFT frameworks, fixed-basis system risk management, and with the submission of regulatory manuals and other documents over 2,000 types. And we have collaboration with Circle USDC, and we have on-chain monitoring beyond traditional finance system. So over about 5 years of stablecoin business experience, we've got the first and only one licensor. And Passport Wallet, it's a former Banpak Osaka Banpak digital wallet, Osaka Expo wallet. It's now renamed Passport Wallet, and JPYC is of course one of the preset token in the wallet, and N-Suite is a Japanese wallet for companies. So the first and the biggest use case of JPYC is yen carry trade. And so using DeFi, JPYC is able to exchange the USDC with 0.05% by basis cost. So it's a very good chance for family office, hedge funds, and credit traders for in-carry trade. We have JPYC Exchange, JPYCX, for issuing or redemption service. Anyone, anywhere, anytime with anyone for any moment, JPYC is available as Japanese yen stablecoin. From just 1 yen, JPYC is very useful with fees and 1 yen. JPYC issued 3 blockchains at first, but we will add other blockchains like Base, ARC, BNB chains, Arbitrum, and so on. So for JPYC is unlimited holdings and transfers. So self wallet is available, of course. JPYC has a flexible development environment, unlike traditional finance. We provide software development kit, and we support various implementation environments. So everyone can make their own bank using JPYC and JPYC SDK. So there are a lot of JPYC related web services, and we will introduce about some of them. For example, Densan System, DSK, is making convenience settlement payment system, and Hashpot makes user wallet, Hashpot wallet, and Nudge provide a credit card payment system, and Asteria is making system integration platform, Asteria WAP JPYC adapter, and N-Suite or Double Jump Tokyo is making business wallet, and CryptLink and CryptTact is making PL2. And today, Comedeo announced Comedeo Pay. It's a entertainment points payment. So after we launch new JPYC, many developer is making JPYC ecosystem. For example, today, one of JPYC developer make X402 compatible program And of course, JPYC is available on X4L2. And I have more 5 minutes. So I will introduce some JPYC related program. This is JPYC info. It's analytics and JPYC catalog. Please make this website. Please see that website. For example, okay, this Hamanako farm is egg farmer. Uzuraya. So this is a kind of farmer, egg farmer. So for example, if I want to buy that egg, you can select JPYC settlement without gas fee. Or I will introduce some JPYC どうしようかな。Great. Yeah, JPYC QR code services, or recently AI agents JPYC chat hub is available. I will show about some movie. So this is in Japanese, but it's a kind of ChatGPT. So please change separate network, and then please show deposit. So mesh JPYC is 9,789. Please show the deposit of test sum. Test sums JPYC is 200. So please send test sum 100 JPYC. Yeah. AI agents send the transaction. And please show test sums deposit. Yeah, it becomes 300 JPYC. Yeah, it's very good, new and very new user interface. You can make that kind of application if you want. So JPYC is a tool that with JPYC you can make new innovation. So let's make great innovation using JPYC. Thank you very much.
Thank you very much for the inspiring keynote, and congratulations again on the JPYC.
Thanks.
All right. Okay. All right. Now let's move on to the pitch session. The highlighted of today's program. We'll have 4 projects presenting today, and each with 5 minutes to share their ideas and progress. And after each pitch, we'll move directly to next project to keep the session on schedule. And as mentioned earlier, if you like to each reach out to any of the presenters, please use the contact details they share during the pitch. Okay. Now, let's begin with our first presenter, Tanken Capital. Tanken Capital, are you guys ready?
Yeah, I'm ready.
Okay.
Thanks for their introduction. Let me share my screen. Five seconds. Okay, let's start. Good evening, everyone. I'm Makito, and I'm based in Dubai right now, and where I'm running Tanken Capital as DeFi risk trader. Today, I would like to share how we use Templar protocol to enable borrowing JPYC on EVM chains using native BTC as collateral, and how we build our JPYC lending optimizer board on top of it. Please note that this presentation is for informational purposes only and does not constitute any form of investment solicitation. For crypto investors, especially in developed countries, selling assets triggers extremely high taxes. In Dubai, I often meet people who say, I can't sell my BTC in my home country because the tax is insane. In Japan, BTC holders can face up to 55% tax. So Japanese high net worth individuals who hold large amounts of BTC are basically forced into three difficult options. Keep their unrealized gains forever, relocate to places like Dubai or Singapore, or pay a massive amount of tax to stay in Japan. Templar protocol solves this problem in our country. Users can borrow JPYC without bridging, wrapping, or sending BTC to a custodian. The structure allows Japanese BTC holders to keep their BTC, avoid taxable events, and still use JPYC to buy a house, a car, groceries, anything, while maintaining full ownership over their BTC. Templar uses a simple but highly secured architecture. Native BTC is first validated through an MPC network, which generates a verifiable lock proof on BTC L1. This lock proof is then transmitted across chains via near intents, allowing the collateral state to be mirrored on EVM chains like Ethereum. On the EVM side, lending markets rely on this cryptographically verified proof to treat the user's native BTC as collateral without wrapping, bridging, or transferring ownership. Only the lock state moves across chains, while the BTC itself always remains safely on Bitcoin. On the other side, people living in Japan face a different problem. The yen yields almost zero interest due to the Bank of Japan holding a massive amount of government bonds. Domestic interest rates stay extremely low, and their savings lose value over time. At the same time, most Japanese users don't understand DeFi risk parameters like collateral assets, oracles, LTV settings, and it's unrealistic for them to monitor multiple lending markets or reallocate funds by themselves. Our JPYC lending optimizer board built on Templar solves this. Users simply deposit JPYC once, and the board automatically allocates liquidity across multiple markets to earn optimized yield. This board follows a design similar to Metamorpho. The board contract holds allocation authority, and our option bot continuously optimizes user allocations based on liquidity, LTVs, interest rates, and market risk. Importantly, the ownership of the asset always remains with the users. Neither Templar nor Tanken can withdraw user funds. The board is also fully ERC-4626 compatible, which makes integration with other DeFi protocols extremely easy. For example, if our JPYC ball is deployed as TK JPYC. Users can mint PT TK JPYC on Pendle or even use PT TK JPYC as collateral on Morpho, Euler, or Templar to borrow JPYC again and loop their position, unlocking yield opportunities in Japanese yen. If you are interested in our products, exploring potential collaborations, or like information related to DeFi or stablecoins, feel free to reach out via Telegram, Twitter, or the contact details in this QR code. Thank you for listening.
Thank you very much. All right. Next up is PowerTech Labs.
Yep. Just give me a moment.
Sure.
Okay, can you see that?
Yes.
Okay, shall we start?
Yes, go ahead.
Hi everyone, I'm Rubio from PowerTech Labs. Today I'll introduce our upcoming JPYC USDC lending market on Euler Finance and briefly share our roadmaps. Just to clarify, this presentation is for information purposes only and not financial or investment advice. So let's start with a quick intro about us. PowerTech Labs is a curator team and developer team based in Singapore. We have a great experience of DeFi development, launched for DeFi protocols, including InsureDAO, which is a DeFi insurance protocol, and Orange Finance, which is an automated liquidity manager for AMMs. Before diving into our product, let's look at the three key issues around JPY, JPYC, and DeFi. As Makichi-san also mentioned, Japan's interest rate is extremely low. Even long-term bonds yield almost nothing. The second one is while DeFi offers high yields, it also brings smart contract risks. Third, JPYC's utility in DeFi is still limited. Its adoption has just begun and yield opportunities are scarce yet. So to address these issues, we are launching JPYC USDC lending market on Euler. This market lets users to earn yield by lending JPYC, supposed to be higher yields than government bonds. It's built on battle-tested protocols, minimizing smart contract risks and systemic risks. And most importantly, it connects yen-pegged liquidity to USD-based DeFi opportunities, accelerating JPYC's integration into the global DeFi ecosystem. So with this lending market, you can lend JPYC to earn interest rates or borrow JPYC against USDC, for example, to short JPY or like tax purposes, perhaps, or borrow USDC using JPYC as collateral to join the USD-based DeFi strategies, as I mentioned in the previous slides. So from now on, let me explain briefly how it works. So I assume you already know, but like other DeFi lending protocols, it's over-collateralized. And simply put, you have to deposit more than you borrow. For example, for our case, we set loan to value at 75%. That means if you deposit 100 USD dollar worth JPYC, which is approximately 15,000 Japanese yen, you can borrow up to 75 USDC. So this is an over collateralization, and this ensures all position remains safe and our market stays solvent. Another topic is interest rate. So our market adopts dynamic interest rates where borrowing rates rises gradually as utilization increases and spike sharply once it crosses threshold. And for our market specifically, as a reference, when 90% of the JPYC or USDC is borrowed, lenders can earn around 6% interest rate. So this is our setting. And let's move on to liquidation part. So obviously, if the value of borrower's collateral drops, it might become under collateralized. And to prevent this, anyone can liquidate such kind of position on our market and get a borrower's collateral position at a discount rate. However, the risk is that actually the limited JPYC liquidity on DEX for smooth liquidation. So that means like because the liquidity is still thin yet, this higher slippage may make it like unprofitable for liquidators to execute liquidation. So to minimize this risk, we set first of all a conservative parameters for LTV and LLTV, which gives us approximately 10% price buffer for JPY price movement before liquidation is triggered. We've also set a small caps for our market to align with current JPYC DEX liquidity depths. And lastly, just in case if the liquidation on chain is quite challenging, we are ready for off-chain liquidation utilizing the JPYC redemption for JPY or vice versa. And I need to mention about Oracle design as well. So we actually utilized the Chainlink's JPYUSD feed, but not JPYC's DEX price. Now you might think that what is JPYC DPEX? It may cause a bad position due to a gap between Oracle and market price gap. And that's actually right. But I believe this is not a major problem. And JPY price feed has stronger advantage. Why? Because first of all, JPYC has a redemption mechanism that anchors JPYC at 1 Japanese yen. So if the price slips, arbitrators quickly bring it back and making DPEX very unlikely. And once it repegs, all positions align automatically, so there's no lasting bad debt position in the system. And rather, what's more concerned than short-term DPEG is Oracle manipulation. So if we use JPYC's DEX price with current thin liquidity, someone could move the price with swaps or flash loan and exploit liquidity from our market. On the other hand, if we choose Chainlink's JPYUSD price feed, this is kind of manipulation resistant, unaffected by on-chain swaps or flash loans. And that's why we choose Chainlink's JPYUSD Oracle for our upcoming launch. Of course, we plan to adapt decentralized Oracle for JPYC once JPYC liquidity become more thick enough and trustworthy. Okay, so this was about the Oracle design. And lastly, this is our roadmap. So we start with the JPYC USDC lending market on Euler, keep updating parameters as JPYC matures in the DeFi space, and followed by yield vault launch on Hyperfusion, integrating this lending market, allowing users to expose to high yield DeFi opportunities with JPYC denominated deposit, which creates long-term investment demand for JPYC. And lastly, for phase 3, we plan to introduce JPYC denominated fixed income products on Napier. offering fixed yen yields and increasing holding demand for JPYC. Yeah, so this is just the beginning. We are building a foundation for yen-based DeFi strategies and adoption, and we try to expand the real utility of JPYC in the global market. Yeah, that's it. Thank you very much.
Thank you very much, PowerTech Labs. Up next, cover team.
Hello, can you see my presentation?
Yes.
Okay, so hello everyone, my name is Motoki. First, I would like to express my sincere gratitude to everyone for Fracton Ventures for inviting us and for giving us this valuable opportunity to speak with you today. Today, I'm excited to introduce Shiabe, the Japanese DeFi gateway, a JPYC DeFi gateway. We are here to solve fundamental problem, the barrier to taking the first step in DeFi. For most beginners, the reaction is Euler, Uniswap. It's too complex and scary. Where do I even start? So why exactly is DeFi so scary for beginners? We see three main barriers. First, protocol overload. There are too many services and each with a different UI, making the learning curve incredibly steep. And second, fragmented operations. Users have to constantly switch protocol for swapping, and lending, and farming, which is inefficient. But the biggest barrier is the fundamental fear of I might lose my asset. Shiabe is product designed specifically for DeFi beginners facing this uncertainty. So what is Shiabe? So Shiabe simplified DeFi core functions, swap to exchange your asset, lending to supply asset, and earn to gain it on them, all in one simple place. By integrating these functions, we eliminate the need for users to jump between multiple confusing applications. So our first solution is simple UI that eliminates confusions. As you can see from the demo screen, we priority UI UX superiority and operability and visual reassurance. And our second solution is all-in-one integration solution. Shiabe is not just simple interface, it's an advantage management layer. We provided integrated functions integrated by best-in-class protocol like Uniswap for swapping, Euler for lending, and RBS Suite for yield management. And this simply based by our partnership with PowerTech Lab. Thank you for partnership. And the JPYC pool is built and operated on reliable Euler protocol and curated by PowerTech Labs. This provides guaranteed trust and they ensure the pool safety and robustness. And so our uniqueness providing safe first step with JPYC. We allow users to start their DeFi debit safety with stable Japanese yen. Our unique approach specializing in leading protocol that use JPYC, which is the most reassuring asset for beginners. So this is a disclaimer. Thank you for listening.
Okay. Thank you very much. All right. And finally, let's welcome Secure Finance, our last presenter of the day.
All right. Let me share my screen. This one. Can you hear me, by the way?
Yes.
Right. Let me share. Okay. Thank you very much, everyone. Good evening. I'm Masa Senshi Kikuchi, founder and CEO of Secure Finance AG. We are building decentralized and on-chain financial infrastructure, the base market for fixed income, starting with term lending and zero coupon bond trading. Everything we do is non-custodial with asset level compliance built in. So traditionally, financial products ride on multiple settlement networks, very complex, takes at least T+2 days to settle, operate during business hours only, Saturday, Sunday doesn't work. On-chain world, we get a unified settlement layer, just one ledger or multiple blockchain, direct token ownership, near instant settlement, and 24/7 markets. Our focus is a growing population of on-chain residents who expect that experience by default. That shift reveals a large-scale mismatch between the trillions in traditional interest-bearing assets and today's comparatively small on-chain yield market. The takeaway is simple. Fixed income primitives have massive heads down to grow once price discovery and risk transfer move fully on-chain. Why now? Because the building blocks have aligned tokenized real-world assets, institutional-grade stablecoins, and deep crypto collateral, and 24/7 digital market venues. Together, they create both demand for predictable funding and supply of programmatic yield, which is exactly what fixed income rails are designed to match. And stablecoins serve as the on-chain value reserve. However, it needs counterparty to drive economy, which is real-world assets. If stablecoins and RWAs are combined together, you will have full scale of financial growth, such as lending and borrowing, payments and risk management with transparent, programmable cash flows. That's fertile ground for fixed rate and variable rate markets. And here's our stack. Our stack is 3 layers. At the base layer is an order book lending market for fixed income price discovery. Above that is our credit layer. It is non-custodial borrowing against collateral, in this case, Filecoin-backed stablecoin, USDFC, with asset level controls. And at the top, we're going to develop strategy vaults, assemble these primitives into portfolio products. And all modules are designed for transparency and composability. We are seeing strong community growth and healthy early stage across the fixed income lending. Importantly, this traction is quite organic, and users are coming for rate certainty, better capital efficiency, and ability to structure strategies, carry trades without giving up self-custody. And here, with JPYC launch, we're happy to announce that we're going to add 5 pillars of product suite, which is quite comprehensive yen stack, fixed rate lending and borrowing and JPYC, and WBTC, Ether, and real-world asset-backed collateral, and on-chain yen benchmark rate to anchor pricing. And we're going to build Yarn-based vault integration to automate yield strategies. And finally, we're going to run X402 facilitator, which is Coinbase-led, which is interesting to grow the machine economy. So websites can accept stablecoin payments directly in code. So together, these concepts crypto markets to the yen economy with standardized rate references, bring a stability and transparency to yen-based on-chain finance. And compliance is our first-class design constraint. At the asset layer, we can apply KYC, AML, and allow lists, including holding and withdrawal control. This is mostly done on the real-world asset issuer side. And the UI is provided through IPFS-based serverless architecture while blocking access from OFAC-sanctioned countries. So the protocol layer remains non-custodial and decentralized. An internet layer handles node operations and data transport. This keeps users self-custody while enabling appropriate controls on on-chain assets. We're interest rate and blockchain specialists. I spent 17 years in rates and FX. Kenji leads markets with 14 years of trading experience. Aki leads smart contracts with deep engineering leadership. Our backgrounds span derivatives, portfolio management, and large-scale software architecture. The roadmap moves from introduction, yield curve, fixed-rate lending, and CDP stablecoin to growth, the stablecoin lending, real-world asset integration, and the strategy evolves. Then to maturity, with a robust on-chain yield curve, institutional RWA scale, and performance upgrades. So we're happy to move towards mass adoption for on-chain fixed income. So Secure Finance is building the interest rates layer for Open Finance, which is a trillion-scale platform that's accessible to everyone. If you share a vision of predictable, compliant, programmable yield, we'd love to collaborate. So thank you very much. And here's a disclaimers. So thank you very much.
All right, thank you to all presenters for those inspiring pitch, and thank you to everyone in the audience for joining us today. Let me get back my screen first. All right. All right, so it's amazing to see how DeFi builders are leveraging JPYC to expand the possibilities of on-chain finance in Japan and beyond. So to wrap up the session, I'd like to hand it over to Toshi Kamei from Fracton Ventures for the closing remarks.
All right, yeah. Okay, can I start? Okay. Oh, yeah. Hi, nice to meet you. I'm Toshi, co-founder of Fracton Ventures. Again, thank you being here, for everyone here today. So how was the event so far, actually? So finally, I'd like to share a few closing remarks. Building in DeFi in Japan is not easy, right? So there are regulations and, many people still don't fully understand this space and markets. But I know many of you here feel that every day, right? But after seeing the presentation today, I felt something clearly. So there are people who keep building anyway, and that matters a lot. Japan as a market is still underestimated, we thought. People often say, crypto won't grow in Japan. But to be honest, I think that means many people have not realized that its strength yet, especially the value of having a yen-based stablecoin and DeFi ecosystem that's meaningful globally, I think. And the founders who presented today are the ones opening that path. Around Fracton Ventures, we see more and more teams like that, and also entrepreneur like this. So this is not just small trend, I think. Also, as you know, it's becoming something real. So let's keep moving forward together at our own pace, and DeFi from Japan has a lot of room to go. So today, felt like a reminder of the future. So once again, thank you for joining us today. This is my closing remarks. Thank you very much.
Thank you very much, Toshi. Lastly, Okabe-san from JPYC, if you have some comments, please share your comment.
Thank you very much. So thanks for coming this JPYC DeFi event. So it's a very good opportunity for everyone, those who are interested in DeFi and Japanese stablecoin. Thanks for coming, and let's make innovation together. Thank you very much.
Thank you very much. Okay. So before we end, just a quick note for everyone. For business professionals, if you are interested in collaboration or partnership or discussing opportunities around JPYC or DeFi, and for builders, if you like to talk about joining an incubation program or get feedback on your project, please feel free to reach out to us anytime, and you can contact us email or Telegram here. And then thank you once again for being part of today's event. We look forward to continue to grow the ecosystem together. Have a wonderful day, have a wonderful night, and see you at next event. Thank you very much.
Thank you very much.